It's June and there's a lot going on in real estate. My goal over the next 20 to 25 minutes is to give you an update, give you all the things that are happening so that you're educated on the hottest topics in the real estate market. So with that, we will go ahead and get started. I will share this first slide that comes from Ivy Zellman from the Z Report. It says, this month, our broker contacts reported a continuation of robust demand and intense competition from buyers to win houses. With bidding wars, all-cash offers, waive contingencies, and rent-free leasebacks increasingly common in many markets. So much happening across the country in real estate right now, but the biggest story certainly is the lack of available inventory causing this market. They call it here robust demand, intense competition. We're seeing bidding wars, all the things that we know that are happening right now in the real estate market. Why is that happening? I want to give you a couple of visuals to use in communicating that really, I think, underscore why that is happening. First reason is we don't have the sellers that we need in the market today. This graphic here from NAR shows seller traffic. Think about those that are putting their homes on the market. And in this gray, darker gray is the very weak seller traffic moving to blue, and then dark blue in no case there, maybe a little bit darker blue, stronger seller traffic in one state, in West Virginia. You can see it there, but the majority of the country, weak to very weak seller traffic. Now, so we cross over to the middle of the year. We've talked about how experts are saying some more inventory should come back to market, and that's the question mark. We're waiting to see that. Now, let's contrast that just visually with buyer demand or buyer traffic. And what do you see? We have strong to very strong buyer traffic across the country. So, very weak seller traffic, very strong buyer traffic. And this is something that you already know, but this really underscores the reality across the country, no matter where you're at, that largely we're seeing less sellers, more buyers in every area of the country. Many have called it, Realtor.com used this wild, wild west environment. Buyers are doing anything they can to stand out. And more, all cash offers do just that and can mean the difference between getting that dream home or winding up empty-handed again. And we're going to talk about this, the buyer fatigue, the buyers that are, frustrated right now that they can't find a home or have been outbid or whatever the case may be, that their offer may be declined because of an all-cash offer. We know a lot of that's happening. And a lot of this information you can use to define reality for those folks. And then I'm going to get into some things in just a few minutes that offer hope for those as well to stay in the hunt. But if we look at inventory, we know across the country we're in this situation because inventory has been depleted as we went through last year and saw this low in December and January of this past year, to where now April, the most recent number reported by NAR, 2.4 months on average of available inventory across the country. And we want to see that number continue to rise. And we'll talk about that. But, as you start to position those that want to buy, those that are in the buying process, setting that expectation that we're in this situation because of the lack of inventory. Now, we've talked in past monthly market reports about the reason for the lack of inventory. I'm not going to go deep into that today, but go back and look at prior monthly market reports that underscore the lack of construction that has put us into this situation right now. But what does all this mean? What does this mean for those that are buying? The price is going up. We have more buying than that are selling, and we know price is going up. The March year-over-year home price appreciation numbers have just come out. FHFA 13.9%, CoreLogic 11.3%, Case-Shiller 13.2%. So if you remember last year, this number was right around 10% in the calendar year. Year over year, we're still seeing hot appreciation into the market, and forecasters saying, appreciation is going to continue. Now, for the last several monthly market reports, we've talked about forecast and what are forecasters saying, and I've got an update for that. But suffice it to say, in the rearview mirror, we've seen strong and are seeing strong appreciation right now. And as we look forward, we're forecasted to see strong appreciation. This is the latest look. Now, we went down from 7 to 5 forecasters in this case for a couple of reasons. One, these are forecasters that are forecasting home price appreciation in 2021. The other 2 forecasts for the next 12 months. This gives us a little bit more of an apples to apples approach. But also the one thing that these 5 have in common is each one of them have upped their forecast as the year has gone on. You know, we're here in June, and you know, we started out in January. It's come up several points since then. The average right now, 8.2% appreciation by forecasters in the 2021 real estate market. Now, what's that going to depend upon as we go throughout the year? Demand and supply. We know demand is there, and we're wondering, is supply coming back? We've talked about that, but that will be the ultimate determiner of price as we go forward. But what you see experts clearly saying here is we're going to have a strong price appreciation this year as we go throughout. And that's just, again, not in one area of the country. If we look at the FHA maps and price appreciation by region, we can see strong appreciation across the country. You know, on average, 12.6% appreciation year over year in Q1 of this year. Now, what stands out to you is that mountain area where we see over 15% appreciation, and an area that we want to take a look at. You know, some areas there that are seeing strong appreciation year over year that people are starting to say, okay, is this sustainable? Are we getting a little too hot here in the price growth we're seeing in homes across the country? So it's something we're going to continue to watch, and something that I think experts are going to continue to talk about, and maybe even talk about more as we see more appreciation. You know, Bill McBride, who we often quote in the monthly market report, said this, and I think it articulates well the inventory issue. If inventory increases slowly, house prices will continue to rise rapidly. And if inventory rises sharply, house price growth will slow. So here's the question I would ask you. What do you see happening in your area? We know on average across the country, we're seeing less sellers, we're seeing more buyers, but what are you seeing relative to inventory growth? Do you see it growing slowly? Do you see it growing rapidly? Being able to bring that with your local market information is going to be critical in today's market. Now, you know, the question of inventory is the big question. We talked about it last time in the monthly market report. We talked about the economist from the Pulsenomics survey that said as we cross over into the second half, we're going to see more inventory come to market. You know, that will come from a number of different areas. Those that didn't sell in the last year and feel more safe, we know those people are coming back to market. Those that have been affected by the pandemic, and we've done extensive work on that, and you're well prepared to understand that. And then third are builders. And, you know, the builder category is certainly where we're seeing headwinds of rising costs. You know, you can't turn on the TV without hearing about rising cost of lumber in today's market. Certainly it's dominating what we see in our business. And that's caused a slowdown in some of the leading indicators in building. And I'm going to go to a quick quote from the National Association of Home Builders from Robert Dietz. He says, the decline in single family permits indicates that builders are slowing construction activity as costs rise. While housing starts were strong at the beginning of the year due to the home builder constructing homes that were sold pre-construction, higher cost and limited availability of building materials have now paused some projects. So that inventory that we saw coming and experts saw coming from builders in the second half, there's a question mark there. Okay, what is going to happen with the rising supply costs? Now, as economists talk about this, what I hear them saying are a couple things. One, it's an issue and it's affecting builders right now. Second, their forecast of this is an issue that we will work through once the supply and demand imbalance is worked through. Now, the question that's out there is how long will that last? And you see here, we're starting to see in that leading indicator, the builders are saying, okay, we're going to pause, whatever the case may be. in new construction. A lot of people talking, and we've talked about it, is this a bubble? Just continued here from Morgan Stanley. We have strong conviction that we are not experiencing a bubble in U.S. housing. We're not suggesting that home price appreciation will maintain its current torrid pace and home prices will continue to rise, but more gradually. So, you think back to that map that we looked at of pricing in the red area and the mountain area, that's the torrid pace, the rise in prices across the country here. Morgan Stanley is saying here, we don't see this as a bubble. We do not also see this as sustainable, something to keep in mind there. All of this rise in prices causes more and more people to say, okay, are homes even affordable? So I want to spend just a minute and talk about housing affordability. As we always talk about this, we want to balance the reality of affordable housing versus housing affordability, two different conversations. Affordable housing oftentimes references the number of homes on the lower end of a market that are available for purchase. Housing affordability refers to how strong and how powerful the dollar is relative to what someone can buy. Mark Fleming from First American, who we quote often, said this: housing affordability on a year-over-year basis declined in March for the first time since January 2019. So let me preface what he's saying. It's rising, declined for the first time, ending a more than 2-year streak of rising affordability. So it's going up March. It doesn't go up as much. It ended that incline there. He goes on to say, house buying power is likely to remain robust in the months to come, but affordability trends will likely hinge on changes in nominal house price appreciation. What's he saying there? As we go forward, homes are going up in value, interest rates are forecasted to go up. That's going to compromise affordability. So he said that almost immediately, almost had to walk back that quote. And he said this: looking back at the bubble years, house prices exceeding house buying power in 2006 nationally. But today, house buying power is nearly twice as high as the median sales price nationally. Goes on to say, many find it hard to believe, but housing is actually undervalued in most markets, and the gap between house buying power and sales prices indicates there's room for further house price growth in the months to come. So what's he saying? There's room for homes to go up in price, and as they measure affordability, house buying and houses are actually undervalued in most markets. Not something we're hearing a lot out there, but when you start to look at the numbers, that's very apparent. Now, how we've always looked at this at Keeping Current Matters and Bridge Builders is, looking at the Housing Affordability Index. Okay, and if we look at the Housing Affordability Index that's produced by NAR, you can see where we stand today. Now, if you haven't seen this, the higher the index is, the more affordable a home is. And where do we stand today? We stand in a very, very good position. Homes being more affordable, almost going all the way back to 2012, 2013. And what the dollar will buy. Now, what stands out are the area in the middle there where, were the years where distressed properties dominated the market after the housing crash, but very, very good affordability relative to what the dollar will buy. If you want to look at that visually, the percentage of median income needed to purchase a median price home historically is about 21.2%. Back in the housing crash, that rose to about 25.4%. And today we sit at 14.4% on average, the median income needed to purchase the median priced home. So homes being very affordable when we look back over time. I mentioned those that are in the hunt right now, trying to buy a home and maybe have gotten outbid or whatever the case may be, maybe getting frustrated or fatigued in their pursuit of buying a home. Here's what I would remind them of. Homes are affordable. And as opposed to renting, the options are still very, very good. Mike Laughlin said this from the Urban Institute. Contrary to popular belief, owning one's home is frequently more affordable than renting. It is cheaper to buy a home than it is to rent in 2 out of 3 of American counties. So it's more affordable to buy a home than it is to rent. We know all the benefits of home ownership. We've talked about that. June's the National Home Ownership Month. I'm going to talk about that in just a minute. And what's happening with the price of rent? It continues to go up. This is a look going all the way back to 1990, and rent continues to go up. Renters do not see the benefit that homeowners do, whether it be through the power of a refinance, whether it be through all the intangible or non-financial benefits of home ownership that we know, and we need to be vocal about that right now. You know, Mike Laughlin also in that report said this that I thought was very important relative to renting. We need to stop seeing housing as a reward for financial success and instead see it as a critical tool that can facilitate financial success. Affordable homeownership is not the capstone of economic well-being, it is the cornerstone. And certainly we know across the country, the business that we're in, all the stories that we know of folks that, you know, have used equity in their homes, have used the appreciation in their homes to start a business, to send a child to college, whatever the case may be, in using their home to do that. You know, when we talk about that equity position, we've mentioned that a lot coming out of the pandemic, and we've gotten the most recent numbers from Adam Data. Homes with at least 50% equity are skyrocketing. 17.8 million homes in this country with a mortgage were considered equity rich, meaning they have greater than 50% equity. That number equates to 31.9 million or 31.9% of properties that have a mortgage on there, and 38%, according to Adam Data, are owned free and clear. Significant equity across the country in homes. So I think as we start to look at that, we have to look at, okay, what's the advice being given right now? Another piece that I think you can use for those that you're working with to encourage them in the housing market, in the pursuit of buying a home. And what we pulled here, the research team pulled what top financial institutions right now are saying about housing. These are institutions that manage more in wealth than anybody else in this country. And we want to look at what they're saying right now about housing. What are they telling their best clients? Start here with JP Morgan. Home buyers, interest rates are still historically low. As of the last week, 2.99% on the average 30-year fixed, though they're inching up. Housing prices have spiked during the last 6 to 9 months, but we don't expect them to fall soon. And we believe they are more likely to keep rising. Certainly what we've seen from forecasters. And if you're looking to purchase a new home, conditions may be better than 12 months hence. Those who remember the housing bubble of 2006 and 7 may be nervous watching U.S. housing prices soar, but the previous bubble was fueled by speculative buying, which we do not think is the case today. We know lending standards are different in our business, and we know that speculative buying is not out there. We know that people are making decisions that they want something different for them, for their family, coming out of the last year. That's what JP Morgan is saying in their analysis of U.S. housing. Let's go to Merrill Lynch here. There are reasons to believe that this is likely to be an unusually long and strong housing expansion. Demand is very strong because the biggest demographic cohort in history is moving through the household formation and peak home buying stages of its life cycle. Pause there. They're talking about millennials. They're moving through and wanting to buy homes. They go on to say coronavirus-related preference changes have also sharply boosted home buying demand. And at the same time, supply is unusually tight with available homes for sale at record low levels. Double-digit price gains are rationing the supply. Okay, we know that. We see that in our business. What is Merrill Lynch telling their clients right now? I want to go to another. Goldman Sachs. Strong demand for housing looks sustainable. Even before the pandemic, demographic tailwinds and historically low mortgage rates had pushed demand to high levels. Consumer surveys indicate that household buying intentions are now the highest in 20 years. I'm going to come back in just a minute to the household buying intentions, but they're saying people want to buy homes. They go on to say, as a result, the model projects double-digit price gains both this year and next. So if you're in the hunt right now, you're looking for a home, stay in the hunt. Look at what some of the top wealth managers across this country are saying about housing. Last one I'll use here. Morgan Stanley, unlike 15 years ago, the euphoria in today's home price comes down to the simple logic of supply and demand. And we at Morgan Stanley conclude that this time the sector is on a sustainably sturdy foundation. This robust demand and highly challenged supply, along with the tight mortgage lending standards, may continue to bode well for home prices. Higher interest rates and post-pandemic moves could likely slow the pace of appreciation, but the upward trajectory remains very much on course. So across the board, we see these wealth managers and these institutions saying, certainly in housing, we expect this to continue into the coming year. We expect prices to continue to grow. If you're thinking about buying, do it now. And we don't see the speculative buying that we saw back in 2006. Something key to remember, something that we ought to get out in the market as folks need that encouragement as they work hard to go out and acquire and purchase real estate. One of the great things about June is it's National Homeownership Month. Every year we update visuals. You can go in the member area and grab those visuals for National Homeownership Month and share this message, share why homeownership is so important, the ability to build equity, all the non-financial benefits that we know. And it's up to us to get that word out. All those visuals are available for you, and go download those now. The next thing I would say is, while this is Homeownership Month, Americans agree. The Gallup survey has come out, and Americans' choice of best long-term investment has been real estate. This survey has been going on for quite a while, and this 41% far outproducing stocks in Gallup's poll. The 41% choosing real estate is the highest selecting of any of the 5 investments options in the 11 years past. Gallup's asked this question. So important to remember, we look at that graphically, you can just see just how high that is, with Americans' choice for the best long-term investment being real estate, going all the way back to 2011. Now, I want to mention something about this that is happening right now in real estate. Coming out of the last downturn in 2008 and 9, we saw folks kind of say, is buying a home what we want to do? And whereas we sit today, people saying, the demand, the folks that want to buy a home, like we just talked about, it's at an all-time high. Very, very different in two different one being a pandemic, one being the housing crash, different scenarios. I'm not saying they were the scenarios, but both crises. Coming out of this crisis, we're seeing a very, very different opinion, approach, and desire towards real estate. And it's our job to get the word out there. We always want to help you get the word out there. And right now, the 2021 summer buyer and seller guides are available. Use those buyer and seller guides to start to build trust, to start to get your message in the hands of people. All the articles, all the information contained in there are what people need to know about buying, about selling a home in today's market. So as always, I'm grateful for the time that you invest in the monthly market report, becoming better educated about what's happening in real estate all across the country. We're grateful for your investment and support in the monthly market report, and we'll see you back again next month.